No, okay. Yeah. So, friends, welcome to today's CIB session. Today, our topic is a bit simple. Means simple for the one who knows the things, and difficult for the one who doesn't know. It's life is like that. Once you clear CIB, you'll say, okay, CIB is simple. Before clearing CIB is difficult. Every exam, same logic, right? So today we'll be studying types of LCs. Types of LCs means there are roughly 13 to 14 types of LCs. See here, to be frank, there are not only 13 to 14, there may be at least 50 to 100 types of LCs. As and when, see here, what is an LC basically? Before that, okay, before starting, let's go with the motivation first, because motivation is very important in today's age with the COVID situation. When obstacles arise, you can change your direction to reach your goal. You do not change your decision to get there. I read the same quote on a daily basis. Why? Because just reading too many things and forgetting is of no use. Reading only one or two items and then remembering them throughout your life is important. Okay. Download Adda 24/7 app on your mobile to get the latest updates on various exams, as well as the study material, video lectures, everything. It's an online class basically. You can use this code Y432 to avail the flat discount of 77%. Okay, for the CIB 22HS. You can definitely use it, share it with your friends so that others can also benefit. We regularly start new batches, so definitely try for it. Okay. So today's topic is types of LCs. Okay. Now, as I said, there can be thousands of or 50, at least 50 types of LCs. Now, what is an LC here? LC is very simple. If the seller, means not seller, the issuing bank agrees to issue something and the beneficiary or the seller agrees to that thing, whatever issuing bank has asked. So that's an LC. He'll prepare the documents. Only the condition is it should be documented. Everything should be documented. Okay. So roughly we'll be studying these 14 types of LCs, but there are also some LCs which are not a part of this. That is called a standby LC. Standby is altogether a different aspect and not covered, means not that important for CIP. Just to give you one liner, standby LC is similar to that of the guarantee. Means in Europe and USA, the banks issue standby LCs. They rarely issue guarantees. Okay. Now, why? Because many of the countries feel issuing guarantee is not the job of the bank. So what have they done? They have renamed it as standby LC, changed certain features and issued it. Means it's like calling Ram or Sham. Either you call Ram or Sham, both are one and the same. Okay. So it's like this. So types of LCs will be directly hitting our topic. What are the various types of LCs here? I'll go one by one. Revocable LC, because see here, what is LC and what are the details, what is the applicant, what is the beneficiary, issuing bank, everything I've covered it in a separate lecture of mine. You can follow that lecture, okay, on this app itself. Okay, so you can also join the paid batch of ours. So revocable LC, revocables here. Firstly, remember one important part: revocable LCs do not exist now under UCPDC 600. Okay. Revocable means what? Revoke. What do you mean by revoke? Revoke means I can take it back. Okay. Revoking of sanction letter means what? If I sanction a loan to some certain customer and then the bank finds later after sanctioning that the customer is some problematic customer which we didn't look at or we didn't pay heed to before sanctioning. So bank can revoke it. Okay. Revoke it means take it back. Same thing is revocable LC. See here, LC is issued by whom? This issuing bank. On the request of whom? Applicant. Okay. Now, what does this revocable means? It is issued and it is received by the beneficiary. So what does the beneficiary do? Once he receives the LC, based on that LC, he will prepare the goods and ship the goods. Now, imagine one logic that LC is received, he prepares the good, he didn't send it. The goods are lying in his shop, but he has to send it. Then he receives a message from the issuing bank that the LC is cancelled now. What will he do with those goods if these are custom made? So that's why revocable LCs don't exist now under UCPDC. Okay. If any bank issues revocable LC, then that is outside the purview of UCPDC. Okay. Revocable LC can be modified or revoked independently by the issuing bank or the buyer without any notice. Clear? Irrevocable LC. Irrevocable means reverse of that. Irrevocable LC cannot be revoked or modified without the consent of the issuing bank, the beneficiary, and the confirming bank. So, remember, all the parties involved need to give the sanction or give the okay for revoking that LC. Only then it is revoked. Okay. So, that is revocable LC. Then what is confirmed LC? Confirmed means what? Here, whenever any, forget now this one part because that is not existent now. Non-existent, irrevocable, start from 2 only. What is an LC basically? It is a guarantee of payment from whom? From the issuing bank. It's not from the buyer. Understand the concept. It is from the issuing bank. So what happens? Suppose, let's say, I'll give you an example. It's issued by some, let's say, some bank in Germany. Okay, you don't know the name, I don't know the name. Let's take, for example, or any bank, means not naming as such. It would be bad on our part to name some bank. So any bank in Germany, which nobody knows. Now that bank has taken the guarantee. And imagine the beneficiary or seller is from India, living in some tier 2 city. Okay. So what happens if he lives in tier 2 cities? Will he know the bank from Germany? Although the bank has given the guarantee of payment. Will he believe in that guarantee of payment? He won't. So what will he say? Once he receives this LC, he'll go to his local bank. Now, local bank means what? Local bank means it can be generally nationalized or private bank. Okay. Commercial banks we are talking of. So he'll go to his local bank and tell them that, okay, I have received this LC and the guarantee of payment is from this bank on presentation of stipulated documents. But what you do is you give an additional guarantee for payment. I don't trust this bank. So give an additional payment guarantee. So if this bank, let's say it's SBI. So what will SBI do? SBI tell them, okay, we'll give. Because why will they give? See here, there are 2 reasons for this. Number 1, SBI should know the issuing bank. It should have the lines on that issuing bank. Lines means what? It should have the credit attached to that issuing bank. Means some lines of that is called as line of understanding, or these are lines of understanding. These are generally called. So there are 2 types of lines. Always remember. One is country line and second is the company line. Always. Okay. Country line means it's totally based, means the risk is covered for the whole country. And if it's a company line, then the risk is covered for the company. So ultimately, always remember, in international trade, first country lines are important. And after that, company lines are important. Because it may happen that the company is very good. Afghanistan. There may be a good bank. But if the whole country is in problem, then what will you do? Right? Same thing can happen in anything. Right? Many Middle East countries. Okay? Or South African also. Forget it. Not our topic of discussion, which countries. Okay? So, this, what happens if SBI knows this issuing bank? Then what will it do? It will say, okay, I know this bank. I have lines on this bank. I'll give a confirmation from you because I know this bank is a good bank. So they'll add a confirmation and charge you confirmation charges. Okay. So confirmed LC is an arrangement where another bank or FI adds its guarantee to the LC, right? It should be a local bank generally, or known bank, not only local, it can be a known bank also. Unconfirmed LC, reverse of that, means directly the issuing bank has issued and that has given the guarantee. So no other bank is taking the guarantee of that. Okay. So other banks are simply acting as what? Advising banks and courier guys, to be frank, no risk. Next is site LC. So LC at site. LC at site, here there are 3 types of payment systems. In fact, there are 4 to 5 types of payment systems. Out of that, I'll give you a gist because that is not that important. I have already covered it. So there are 3 types of payment systems under LC. I'll tell you only LC now. I won't go for that collections and that open account. Okay. So LC, there are 3 types. One is site, second is usance, and third is what? That effort. Okay. What is site? Site means mal do, paisa lo. Simple, right? It's as simple. Like you go in the malls. or you purchase something, you get the material and you pay them immediately. That's site, right? So site LC requires the advising bank or the seller's bank to make payment at site, on demand, or upon presentation of documents. Okay. So this is here. It can't be only or actually. At site means what? When will the issuing bank pay? Although it is site, but the issuing bank will pay on presentation of complying documents. This word complying is missing over here, but it should be complying document. If I send any document, will the issuing bank pay? No. Because what does the LC term say? LC term say that if the documents which are presented should be in line with whatever the LC is prepared, and they should be in line with the UCPDC 600 and ISBP. Okay. So if I present any documents, this bank won't pay. Remember, keep the logic clear. Okay. So LC at site means on presentation of complying documents, they immediately pay. Immediately pay means how many days? Received and paid. Not like that. International payments or international LCs have 5 banking days. Once they receive the LC, leave that day. And from next banking day, you'll start 5 banking days. Okay. That's the way it is done. Already covered. So won't waste our time in this. Usance LC or deferred payment. Now, two things are covered same over here. Similar. This should be 6 and this should be 7. Okay. These two are totally different. What is usance? Here, what is site? Site means mal do, paisa lo, right? What is usance then? Udhari. Udhari means what? You give the payment, you give the material, and after 45 days, I'll make the payment. Okay, that is usance. But in that, once usance is given, what is the guarantee? Means, suppose if I give you the send the materials, what is the guarantee that you will be paying me? So in that case, there is a bill of exchange. That bill of exchange, whenever we receive, means it is issued by whom? It is issued by the beneficiary or the seller. On whom it is issued? It is issued on the issuing bank. It's never issued on the buyer because it's under LC. Who has given the payment guarantee? LC issuing bank. Okay. So usance LC is by usance LC means bill of exchange is issued by the seller or the beneficiary on the issuing bank. And what happens? Once the documents are complying and the issuing bank finds it that the documents are okay, it will send a SWIFT or the fastest communication mode if there is no SWIFT. Fastest communication mode that we accept the documents and we will be paying on maturity. And we accept a bill of exchange. That is important. Okay, that's the only difference between usance and deferred. So usance has bill of exchange and deferred does not have bill of exchange. Now you will tell me, okay, why the two types then? Means if usance is there, bill of exchange is there, what's the problem? See here. In many countries, the bill of exchange has a stamp duty. Even in India, we have it. But in India, we don't have it for smaller amounts or 120 days. Beyond 120 days, we have that stamp duty. Means that judicial stamps required. Okay. So otherwise, what? Just 1 rupee that revenue stamp, it's okay. So importantly, 120 days or a specific amount. Beyond that, we'll have this stamp duty. So what happens in some countries? It can happen that even for 1 rupee or $1 LC, there can be a stamp duty. Now, why should this customer bear everything? So what does he do? Instead of issuing this usance LC, he issues deferred payment. So in deferred payment, what happens? There is no, all the documents are same. Which are the all documents which I am talking of? Remember, there are mostly 6 documents, at least 6, okay, generally. There can be a financial LC in which there are no documents except bill of exchange. But commercial LC, it has 6 documents minimum. Other than that, it can have many. But what are those 6 documents here? 2I, 2B, and then what? That CO and this packing list. What are 2I? Those who have referred my lectures earlier or my paid service also, Adda's paid service. You can definitely know. 2I means what? Invoice and insurance. 2B means what? Bill of exchange and bill of lading, right? If it's by air, then no bill of lading. Then by airway bill or any communication mode, whatever the document is, okay? So 2I, 2B, CO and packing list. These are the minimum 6 documents required. So if the documents are presented in deferred payment, instead of 6, there would be 5 documents only. Bill of exchange won't be there. Bill of exchange is also called as draft, okay? So usance or deferred is where the draft is drawn on the issuing bank or corresponding bank at the end of the agreed usance period. Okay. So draft is drawn. Draft is never drawn in deferred payment. Understand this concept clearly. In usance, we have the draft. Okay. In deferred payment, we don't have the draft. Then what does the bank send a message? The bank sends the message. Issuing bank will send a message that we accept the documents. Okay. That message will be sent. So that's the difference. Next, back to back. Now, before going back to back, I would come to transferable. Let's see, because that you'll understand it better. Then you'll understand back to back better. What is transferable here? It happens. It many times happens that the seller over here in India. Let's say I'm a seller and I'm an agent, middleman, and I received an order from USA. So will I prepare those goods? Will I go and make the production? No. What will I do? I'll transfer that LC to someone else who makes the production, right? And at what rate will I transfer? If I receive it for 100, what will I do? I'll transfer it for, let's say, 70 or 80, right? So $20 or $30 would be my margin, right? So that's transferable LC. When the person over here or the seller is an agent and not an actual producer, point number one. He can be a producer also, but the capacity of his may not be that much sufficient. If I receive the order for 1,000 goods and I can make only 500 goods, should I leave the order? No. What will I do? I'll give the 500 to someone else. Okay. Means in Hindi we call it Bhakti Bhut Ki Langoti, right? That's the logic it is followed. Means just getting the order for 500 products, I got the order for 1,000 products. I'll earn $30 at least on the remaining 500, right? That's the logic it's followed. So coming back, transferable means what? It is transferred from the beneficiary 1 to beneficiary 2. Understand the important difference in transferable, means important point in transferable. The point is like this. It can be transferred from Beni 1 to Beni 2 only. Understand this. Okay. Means if I transfer this LC, I am the agent, I can transfer it to only one level. Now, in that one level, can I transfer it to many guys? Yes, I can. Okay. But now point number 2, can these guys whom I have transferred this LC, can they transfer it further? No, that is not allowed. So transferable LC is, because it's UCPDC 600 has forbidden it. Earlier 500 it was there. Okay. So what happens? I'll transfer this LC to many guys, whoever are capable, and get it done. Okay. Generally, it's transferred to 2 to 3 guys only. Okay. 2 to 3 sub-agents, we call it, or sub-suppliers. Okay. So now we got the point. Okay. Now what is changed if transferable LC? What will I change if I receive that LC from this issuing bank? I'll change only importantly. I can change many things, but importantly, what will I change? I'll change generally the 2 amounts. Which are the 2 amounts? Amount of credit and unit price. Okay. What will I change next? I'll change the dates. Means when the shipment is to be done. Number 1, when the documents are to be presented and the expiry of that LC. Right. I'll change that for my benefit. I'll transfer. Also, what will I change? Otherwise, what will happen? Next time, this guy whom I have transferred, he'll bypass me and directly speak to the issuing bank or the applicant in some USA. Okay. So for that matter, what do? We change the name of the applicant also over here. Okay. And the name of the bank is my bank, who has transferred it. So everything is kept under carpet so that I can't be bypassed later. Okay. So that's transferable. Once you get the transferable, now I'll explain you back to back. See, back to back is similar to that of transferable. Understand this, not same, similar. What is the difference then? See here. In transferable, what do? I get the LC from the issuing bank, and that LC, same LC, I transfer it by making certain changes. Now, what changes? Those certain changes means all those 5 things which I told, and the applicant name, bank name, all those things, and something if additional I want. Okay. And I transfer the same LC. Remember this. Okay. Now, important part in back to back is when I receive the LC from this issuing bank, I keep it to myself. I don't transfer that LC. But what do? I go to my bank and tell them, see here, this is the LC I have received. Based on this LC as a collateral, you issue another LC. For what? Lesser amount. Right? Of course, lesser amount. So that bank will issue it. Which is the collateral? Collateral is that issuing bank's first LC. Now, will this bank take this LC as a collateral? Yes, it may. When the issuing bank is a known bank and a big bank, Citibank or something like that, or this bank, the bank which is transferring or doing the transaction back to back, that is generally called as transferring bank. So that bank knows the issuing bank and has lines over that issuing bank. Only then that bank will do the transaction. Otherwise, why will it do? Right? Simple. So this back-to-back LC, this issuing this beneficiary bank, I'll call it, or transferring bank, I'll call it. They'll keep this as a collateral and issue a new LC. Now these two LCs are totally different, not at all related to each other. Okay. In transferable, both the things are related. Okay. Then untransferable. Untransferable means normal LC, commercial LC we call it. Okay. Means it can't be transferred from first penny to second penny. So normal 90% of the LCs are untransferable only, commercial LCs. Okay. Irrevocable and untransferable is not written over there. Forget this. Okay. There are only two types of LCs. One is normal commercial and second is this transferable. Forget this. I'm not talking about this standby and other things. Okay. Any untransferable LC cannot be transferred to another penny. Okay, that's okay. Means simple standby. Now this standby I was avoiding because it's not a part of commercial LC, but it's a part of guarantee type. Okay. So standby means what? Here. It's like this. In okay, what is in guarantee? Let me talk about guarantee first. So you must understand the guarantee concept, and standby is easy because it's just the name of Ram or Sham. Okay. So what is guarantee now? Here. Guarantee means that if the beneficiary pays or doesn't pay, means it's like this here. Under what LC? Under normal LC, what happens? The issuing bank takes the responsibility of payment. Means it's not on the applicant to pay, right? But in standby or guarantees, what happens? This applicant has a guarantee. Means applicant is to pay, and if he doesn't pay, then this bank will pay. To explain you simply, when you take a loan, right, or we have guarantors, right? Nowadays, gone almost, but for some bigger loans, there are guarantors. So what does that guarantor's responsibility is? Responsibility is like this. If the applicant or if the beneficiary of that loan doesn't pay, only then guarantor will pay. Same logic. What's the difference? Guarantee is the same. You do it in bank, you do it in anywhere, you do it in friendship, or you do it in any hotel or anywhere. Guarantee means guarantee. If he doesn't do, I'll do. That's a simple, right? So there are various types of standbys. Okay, that's a separate topic. We'll take it someday else. Okay, because there are almost 7 to 8 types of standby LCs, performance and financial and all those bid bond, everything. Okay, not our topic of discussion today. Next is freely negotiable. Freely negotiable. Now, freely negotiable means what's here? Whenever LC is issued, the negotiating bank or nominated bank's name is mentioned in that LC. Okay. Now, if that nominated bank's name is not mentioned, then it's called as freely negotiable. Anybody can negotiate. Okay. Generally, what happens when a big bank in USA, let's say Citi, HSBC, or any bank, or even SBI for that matter in India, we shouldn't only consider the US banks or some foreign banks as big banks. We are far bigger nowadays. Okay, SBI is reached in among first 50s now, and with the merging of various banks, we have become a huge conglomerates. And if the merging continues, we can someday overtake all those biggies. Okay. So what is freely negotiable? Whenever these banks issue any credit, what do they do generally is they name the bank who can confirm it or who can negotiate it. Okay, then it's called as nominated. But if that bank is not named, then any bank can negotiate it. So that's called as freely, right? So freely negotiable LC allows any bank to become a nominated bank as long as it was willing to pay, except infer a deferred payment undertaking or negotiate. All these terms we have already discussed: deferred, negotiate, accept in various videos. Okay. Next is revolving. What is revolving? Okay, now I'll give you an example of revolving. What happens? Like it's in fact a big topic. There are 2-3 types of revolving LCs. Okay. I'll just give you a gist for understanding. Revolving means what? Suppose, let's say, if I receive an order from, let's say, this Mercedes-Benz tomorrow, okay, and they tell me that, okay, what you do is you provide me every month 50 parts of some car, right? Some same part, 50 parts every month you provide it. So what do I tell them? Okay, what you do is you give me an LC every month. Okay. Every month you give me an LC, I'll close that LC, prepare a new LC, then I'll again. Mercedes will say, are you full? Right. That's why they prepare a revolving LC. What is that revolving? Revolving says that here, the amount, the duration of that LC is, let's say, 2 years. A Mercedes wants it for 2 years contract. So every month they'll say that, okay, the 50 parts means how many total, 15 to whatever, 12 into 24, okay, or whatever that is. So every month, what will they do? They'll go on debiting the LC amount which has been already utilized, or LC parts which have been already utilized, right? So that way revolving LC works. There are two types of LCs, revolving LC generally, revolving by time and revolving by amount generally. There can be a third type also if some bank designs it and a beneficiary agrees to it. Okay. Always remember this LC business and this international trade is it's OTC business, we call it. What the seller and the buyer or the issuing bank and the beneficiary agree to it. That's the simple logic. Okay. There can't be any framework for this. Only it shouldn't be illegal and it shouldn't be any problematic case as such. Means illegal is important because AML issues are very big nowadays. Okay. Next part. Revolving and green clause. What is revolving? Red clause and green clause. Red clause means what? It's simple. It allows pre-shipment credit. What do you mean by pre-shipment? Pre-shipment, here, there are two types of pre-shipment. Pre-shipment can be given by the bank in the beneficiary's country. Point number one. Or pre-shipment can be given by the buyer also. Means what the buyer will do? Buyer will say, okay, I'll out of $100 LC, I'll pay $40 in advance. And this LC is only for $60. That's called as red clause. Red clause, in red clause LC, the seller or the Benny is partly paid or is paid an advance before the goods are shipped. Advance payment. So that can be paid by who? Anyone. That can be paid by this buyer also. Or that can be paid by this beneficiary's bank also, negotiating bank. Anything. Okay. So that's red clause. Generally, this red clause is considered for this buyer only, because what the beneficiary's bank has to do, what the issuing bank will say, why do I care? If you want to do any confirmation, silent confirmation, or if you want to do it negotiation, why do I care? Right? It's you and the customer. That's a simple thing. So red clause generally offers for this part only, means from the issuer, this buyer's payment, okay, advance payment. But in India, in exam, CAIIB exam, you remember, this pre-shipment word. So pre-shipment can be given by this buyer or this beneficiary's bank also. Okay. So now last part is green clause. What is green clause here? Green clause is very simple. Only remember one line over from my side. That green clause is for warehouse payment. Warehouse payment means what? If I ship the goods, if I send the goods, let's say I'm in here in Vidarbha area, Nagpur. And what do? I send the goods to Mumbai, Nhava Sheva, for sending it further to USA. Now the ship is after 5 days. So what will I do with those goods? Bring it back. So what do? I keep it in the warehouse. If I keep it in the warehouse, those 5 to 6 days, what is the amount which I'll be losing, right? If the goods are huge amount, then I'll be, what is the interest part on that, right? That's why green clause allows the payment on the warehousing part also. Means that loaning on the warehousing part also. Okay. So that was the part, or that was a point to study over here. You can join our live classes. You can join our Telegram channel. Also use this code Y432 on our paid services to get 77% off directly. Share it with your friends so that everyone else can get the benefit. Okay. Watch this YouTube channels of ours. Share it with on the social media. So let's stop over here. Bye from my side.